Warren Buffett, the legendary investor known as the Oracle of Omaha, has recently rung the alarm bells, warning of an impending economic crisis that could potentially dwarf both the 1929 Wall Street crash and the 2008 Great Recession. As we stand on the precipice of what could be a monumental economic shift, all eyes are on Buffett for guidance and insight. But what exactly has prompted this dire prediction? And how can we prepare for the storm that may be brewing on the horizon? Do watch till the end to be fully prepared for any economic storm. Before we dive in, I want to remind you to hit that like button and subscribe if you haven't already. It really helps my channel grow, and I appreciate your support. The debt dilemma. At the heart of Buffett's concerns lies an alarming statistic. The United States has borrowed an astounding $1.4 trillion in just the first 9 months of fiscal year 2023, with $228 billion borrowed in June alone. These staggering figures paint a picture of potential economic disaster looming on the horizon. But what does this mean for the average person? And how did we arrive at this precarious situation? The real estate bubble, a familiar foe. To understand the gravity of the situation, we need to look back at the formation of the current real estate bubble. As Buffett astutely points out, you're likely to see the greatest fall-off where you've had the biggest bubble, and they tend to be in the high-end market where people have bought for investment or speculation rather than use. But how does a real estate bubble form, and why is it so dangerous? Let's break it down. Number 1. Low interest rates make borrowing cheap and accessible. Number 2. Easy money leads to increased buying, driving up property prices. Number 3. Prices rise to levels that don't match the property's true worth. Number 4. When interest rates rise, many borrowers struggle to meet higher payments. Number 5. Defaults and foreclosures increase, flooding the market with properties. Number 6. Property values plummet, leading to lost equity and financial distress. The non-recourse debt trap. Buffett highlights a crucial factor exacerbating the potential crisis: non-recourse debt. This type of loan allows borrowers to walk away from their debt by surrendering the property without being personally liable for any shortfall. While this might seem like a good deal for borrowers, it poses significant risks to the broader economy. Consider this scenario. A business owner buys a commercial property with a non-recourse loan when interest rates are low. As rates climb and economic challenges arise, they struggle to keep up with payments. Instead of facing personal financial ruin, they can simply hand the keys back to the bank and walk away. Now multiply this scenario across the entire real estate market, and you begin to see the potential for a catastrophic domino effect. Given Buffett's warning, how can individuals and businesses best prepare for a potential economic downturn, while still positioning themselves for long-term growth? The ripple effect on small banks and businesses. As Buffett wisely noted, be fearful when others are greedy, and greedy when others are fearful. This adage perfectly encapsulates the situation many small regional banks now find themselves in. During boom times, these banks eagerly lent money to local businesses and homeowners. But as the real estate market falters, they're left exposed to significant risks. The consequences of this exposure are already becoming apparent. Loan approval rates for small businesses have dropped by 10 to 15% in some areas, meaning that 1 or 2 out of every 10 businesses applying for loans are being turned away. This credit crunch creates a domino effect. Businesses can't grow, fewer jobs are created, and less money circulates in the local economy. The stock market tremors. The stock market, often seen as a barometer of economic health, is showing signs of distress. Major companies like Tesla, Alphabet, and Nvidia have seen significant drops in their stock prices. These aren't mere blips. They're potential harbingers of the trouble Buffett foresees. A key factor driving this market volatility is the Federal Reserve's interest rate policy. Since March 2022, rates have skyrocketed from 0.25% to 5.5%. As Buffett eloquently puts it, interest rates are to stock prices what gravity is to an apple. Higher rates make borrowing more expensive, potentially slowing down spending and investment, the lifeblood of many companies' growth. How might the rise of technology and changing global dynamics influence the nature of this potential crisis compared to previous economic downturns? Navigating the storm. Buffett's wisdom. Despite the gloomy forecast, Buffett's approach to investing remains steadfast. He emphasizes that predicting recessions is futile, stating, "I can't predict recessions. If you guaranteed me there would be a recession next year, I would be buying and selling the same securities I'm buying and selling today." This philosophy underscores a crucial point. Economic downturns, while challenging, can also present opportunities for savvy investors. Buffett's strategy of continuing to invest during market dips has been a cornerstone of his success. Considering Buffett's philosophy of being greedy when others are fearful, what sectors or industries might present opportunities amidst the economic uncertainty? Preparing for 24. Strategies for uncertain times. As we look ahead to 2024, how can we apply Buffett's wisdom to our own financial strategies? Here are some key considerations. 1. Diversification. Don't put all your eggs in one basket. A mix of stocks, bonds, and other assets can help mitigate risk. 2. Long-term perspective. Avoid making rash decisions based on short-term market fluctuations. 3. Cash reserves. Having liquid assets can provide a cushion during economic downturns. 4. Value investing. Look for undervalued companies with strong fundamentals, a strategy Buffett has used successfully for decades. 5. Continuous learning. Stay informed about economic trends and financial strategies to make educated decisions. How can policymakers balance the need for economic stimulus with the risks of further inflating potential bubbles in the real estate and stock markets? As we stand on the brink of what could be a significant economic shift, Warren Buffett's warnings serve as a crucial wake-up call. By understanding the factors at play and applying timeless investment wisdom, we can navigate the choppy waters ahead and potentially emerge stronger on the other side. The storm may be coming, but with preparation and foresight, we can weather it together. Are you prepared for an economic storm? Comment below. You may also wish to check out my other video on 10 buy and hold forever dividend stocks for passive income in the link above and in the description down below. If you enjoyed this video, do like and share this video so that more people will learn about how to prepare for an economic storm. Check out this playlist of my top 10 videos for creating wealth, and I'll see you in the next video. Take care.